We're on the brink of what might prove to be one of the most significant events on the timeline of publicly traded real estate securities. I'm talking, of course, about the August 31st GICS Reclassification, in which real estate will graduate from their time as a sub-industry under financials to take center stage as the 11th headline standalone sector. Here at Nasdaq, we've been inundated with client questions about the changes facing the sector, and I'm here to editorialize on the two most frequently asked questions. Let's talk REITs. What effect will the GICS reclassification have on the sector's capital base? There will most likely be a good deal of passive buying. However, the focus has been on active managers, and I feel as though some of the reports that I've seen have been overzealous in their expectations for generalist inflow. Not to say that generalists won't continue to buy REITs, but the most recent 13F filings suggested a slowdown in non-dedicated buying versus what we saw in 2015. I've seen reports suggesting as much as $100 billion of new capital flowing into the space if managers choose to become equal weight. The ugly truth is that non-dedicated managers might be perfectly content maintaining an underweight position in the new sector. Generalists have bought REITs, that's a fact. It's just hard to quantify the exact magnitude of future purchases, and I feel as though it's going to be more gradual than what we initially assumed. What have other management teams been doing to capture generalist capital? We're undoubtedly seeing a widespread education process. This change is validation of the fact that real estate as an investment is unique. The distinct operating and valuation metrics might not be as familiar to a non-dedicated investor as they are to a seasoned industry veteran. Our clients are ushering generalists through this education process. They're doing so by providing insight into their operations and illustrating the distinctive factors of a REIT investment. This is a much more invasive process than just explaining what FFO or NAV are. Management teams are also doing this by providing information on the workings of different property sectors and how lease duration affects investment risk. And of course, through the accessibility of property tours. Based on our conversations, investors have been proactive, receptive, and willing to familiarize themselves with the space. If you would like to discuss any of this further, feel free to reach out to Nasdaq Corporate Solutions Advisory Services. It's a brave new world for REITs. We hope you're as excited about it as we are.